take based on a 3% return to get to a million? Well, we've done that calculation for you, and here is 6.5 years. Hello everyone, and welcome back to the channel. Today we have a great episode on what compound interest is, as well as a free giveaway of our very own in-house built compound interest calculator. Now, there was a lot of good time spent in creating this tool for you, so we hope you appreciate the effort and time that has went into it. We'll kick today's episode off with a story about two individuals called Bill and Ben and their journey with compound interest. Let's give you a scenario. We've got two individuals here, Bill and Ben. Bill is 25 years old and Ben is 45 years old. Both want to start investing, and they want to invest £30,000 over the next 20 years. For the first 10 years, they each add £1,000 every year into their investing portfolio. And for the last 10 years, they invest £2,000 into their portfolio. Let's say they both make on average 6% per year return on investment. That means after 20 years, they would have both invested the same and got the same return. But let's say they're building these portfolios to fund their retirement at age 65. This is where the power of compound interest comes into play. By the age of 65, Ben will have roughly £49,970 in his investment account. Not a bad return for only putting £30,000, right? But let's have a look at Bill's. By the age of 65, Bill has £160,300. That's over £110,000 more pounds than what Ben got for the same amount of money. This is because Bill's money experienced 20 more years taking advantage of compound interest. For Ben to achieve this figure, he would have needed to save 3 times more than what Bill did. This is the power of compound interest and is why you need to start early. Because if you give yourself as much time as possible, you have the best chance of success and the more you can take advantage of compound interest. So what exactly is compound interest? Well, it's simply where the interest you earn on a balance in a savings account or investing account is reinvested and you can earn more interest in the future. Now, if you're still unsure by what I mean or simply want to see how this works using real numbers, then we have a compound interest calculator that you can download and use yourselves for free. So let me show you how the calculator first works and then how you can get it yourselves. So this is the compound interest and earnings calculator that we are providing you for free, and it's a very straightforward automated way of calculating those compound interest returns over the next 1, 2, 3, 4, 5 years on this slide in all. And it's very straightforward. You only need to enter 3 different things into this calculator and it will do the rest for you. So the fully free things you need to put in is the starting capital, which is here, and your monthly returns, which is here, as well as the monthly costs, which is down here, if you have any monthly costs, that is. So let's give you an example using our own algorithm Sequenti, starting capital of £100,000. So we start off with £100,000 and the average return is roughly about 3 to 4% a month. So let's go ahead and just put in 3 and be conservative. So once we put in 3%, as we can see, all of our yearly outcomes are all inputted for us. So because we're using Sequenti as an example, Sequenti costs roughly £199 a month. So we've included that cost in there to see what the end result would be and what the result would be in 5 years' time. So as we can see, it does all the calculations for you, and also at the end of this capital month, it will take off the balance of the monthly costs. So it's always giving an accurate figure. So we can see that after first month, investing into Sequenti with the £199 expense on a 100k account, you'd have £2,801 in income after it. And it will do this for the start of every month, the last month of the year, and halfway through. So as you can see, after 6 months is here, and the last day of the year, or last month of the year, is here. And this will go on all for the next 5 years, giving you an example of what the return could look like after 5 years of investing in the system. Now, of course, we're saying it is a 3% return, but this is averagely. It's going to have months where it'll do 10, it'll have months where it'll do like minus a little bit. It's just an average figure that we're taking, and it's just meant to be an estimate for what you can expect. Now, what we can see here is, what we can see here, is the cumulative returns at the end of the 5 years. We can see that it's £556,712.68, which corresponds to the last value of December of this year, meaning our total profit would be £456,712.68, which is our net return of 456.71%. Not bad at all. But obviously, you can edit these numbers to correspond with either whether you're using our own algorithm Sequenti, or you're just simply trading yourselves or investing yourselves and want to look at what the returns would be. Now, another thing that we have to offer is a compound interest calculator graph. Now, this, all it does is will show you the process and power of compound interest. So just going on base what we've got here, 100,000 starting capital with 3% return. We can see from this graph here on the right, it starts very slowly. But as the interest mounts up, the capital increases, meaning our total return increases. And this is the power of compound interest. Understanding that at the start, it will be slow, but as we get to those lateral years and we still have the same returns, that's where the power of compound interest comes into play. So on the left here, we've got a capital and a time, and it's going to do is give you a summary of capital over a certain period of time for the capital and time it takes to get to a certain capital. So we can see with £100,000 in, 3% monthly return, after 1 year, you should have 142,000 roughly. After 5 years, 589. After 10 years, 3.4. After 25, 709, and so on. Now, obviously, this is all hypothetical, because when you get to that sort of money, then that's where things you'll need to probably downgrade risk to make sure that you don't have any slippage, or you're trading too many lots. But that's miles down the road anyway. But what we also do have is time, so we can say that, say we have 100,000, how long will it take based on a 3% return to get to $1 million? Well, we've done that calculation for you, and here is 6.5 years. Again, we do what's the target to 10 million, 13 years. And you can edit these numbers here yourselves, just to correspond with whatever capital that you want. So these are the 2 free tools that we're giving you for free, and they're very handy, and we use them ourselves to try and forecast into the future. Now, I'll just show you in a minute how to get this calculator, but when you do, just follow the instructions on the instructions tab, and that will show you how to download it once you've got the access to it. So there are 2 ways that you can get this compound interest calculator. The first one being, if you click the link in the description, it will take you to a sign up page. All you need to do is fill in your details, and you will be sent an email with a copy of a link to the calculator itself. Now, the other way that you can go about it is you can visit our website, www.statiertrading.com. Then once you get onto this page here, you go on resources and you go down to the free compound interest calculator. Now, whether you click the link or not, or you come on here, this is the exact page you'll be taken to. And all you simply need to do is just put your name an email in the sign up box and you will get an email with the compound interest calculator link. Then once you get that, again, all you need to do is go to instructions. All you do is make a copy. So you go to file, make a copy, and then change the name to whatever you want it to be, and that's you got it. It's as simple as that. So that brings us to the end of this video. I hope that you use this compound interest calculator to your own advantage and now have a better understanding about what compound interest is, and you can now visualize the power that it can bring you, like we do here at Statira Trading, because compound interest is definitely one of the wonders of the world, and if used correctly can really help your long-term portfolio gains. Now, again, if you've enjoyed this episode, we would really appreciate a like in the video, and if you want to see more content like this, then please do subscribe to the channel. But until then, I hope you have a great day, and we will see you in the next video.